Thanks for joining us today. I'm Marlon Bowling with you, your tour guide to the ag commodities. It's great to have you on board with us. And we're going to take an eye on the market today to see what it's going to do after all the fallout from the USDA supply and demand report that came out yesterday. Kind of threw the market on its ear a little bit, especially if you happen to be a bear in the market. Boy, you got punished yesterday in the soybeans. And we had a little follow through overnight. I checked the wire just a moment ago. We did not have any flash sales overnight to talk about. So that well has been kind of dry now for a little while. Let's take a look at our corn market. Our quotes are provided by Bar Chart. And last night, the corn did back up a little bit. We had the Globex December going down 5 cents, finishing at $6.91. So just a penny off of its overnight low in that corn. Now, soybeans, remember yesterday, they were over 70 cents higher. Well, for a while, they were showing some pretty strong gains here earlier this morning, and then they kind of fizzled out a little bit. We have November 3.5 higher at 14.91 3/4. They did get as high overnight as 15.08 3/4 before backing off of that level. And in the wheat in Chicago, a little bit lower here. We had December going down a penny and a half. We're at 8.57 1/4 last night. In Kansas City, we have December down a penny and 3/4 at 9.25 1/4. And in the spring wheat trade in Minneapolis, we're also down a penny and a quarter at 9.25 1/4. On the cotton market, we'll take a look at that new crop December contract there, and it was down a whopping 310 points last night at 102.61 per pound, not that far from the low of the evening trade. It had almost gotten as high as 106, 105.95 last night before turning around and going sharply lower. Well, I want to talk about all this with Brian Hoops, president of Midwest Market Solutions, and see what he thinks about this. All right, after the report came out, we had that immediate knee-jerk reaction to the upside in soybeans. They went up about 35 cents in the first minute or so, but then after that, my gosh, they just kept grinding higher throughout the day, and then they're higher overnight. What do we do? It's harvest time, Brian.
Yeah, it certainly is, Marlon. Good morning. I thought it was an interesting reaction yesterday. We opened and kind of hovered around that 14.30, 35 area for a few minutes. And then, as you mentioned, continually built and rallied until we saw those big 70-cent gains by the end of the trading session, and overnight flirted with the $15 mark. Now, it did seem like corn and soybeans had a reaction to the CPI numbers that came out at 7:30. Those were bearish numbers, and the stock market really sold off after that release, as well as the crude oil market. Both those markets really tumbled. And it seemed like it did affect corn and soybeans negatively, as well as the wheat markets. Everything pulled off of its highs. So we could see some real choppy and two-sided trade. You know, a lot of times we'll see a sharply lower stock market, and you'll get some spillover into the grains. Sometimes we talk about maybe that'll if traders aren't going to buy the stock market, they'll step in and buy U.S. commodities. But I think what it really gets down to is what the dollar does. We've seen the dollar break from its highs recently, but since the CPI number came out, the dollar has rallied, and that could put a little bit of pressure against our grain markets this morning. No doubt there's going to be some kind of leftover speculative buying interest come into the market. We saw that overnight. We could see some of that again today, but really that direction of the dollar is what we're watching very closely today. If that's going to give us longer term direction here for the grain markets, if we could really pull this dollar back on a seasonal pattern into lower prices, it'd be very bullish for our commodities, I think, in general, corn, soybeans, and wheat. But we do, like you mentioned, we do have a harvest starting to ramp up late this week. Seasonal patterns are also turning lower for corn and soybeans into the end of the month.
So September dollar index futures, 1,224 points higher this morning at 109.540. That's incredibly high, and that's getting up in that neighborhood. Remember, what was it, Brian? About a week ago, we were up around 110 or a little above there for a little bit. Then we sold off, and folks were feeling better. Now it's going to put in a little pain again on the ag commodity export potential here. All right, Brian, we'll come back in a moment. And this all ties together: the financial markets, the CPI numbers, the ag trade on the grains. How does the livestock market fit in? Well, we'll discuss that in just a moment. Okay, with the big gains that we had in the grain markets yesterday, and then a little follow through, at least in soybeans overnight, let's talk with Brian Hoops again, what that all means here as far as our livestock potential. Just a moment ago, we were talking about the dollar value over 1,200 points higher right now. And the Dow Jones Industrial Average had been holding its own until the CPI numbers come out this morning. What were they? 8.3%, I believe, higher than expected. And the stock market just took a nosedive right after that. What does that mean here for the livestock trade? I know they're watching that, but what do they do about it? And what do they expect?
Yeah, it certainly implies that we're going to see another rate hike, almost a 75 to 100% chance in September here. We'll see another rate hike. And that, is detrimental to the stock market. That's the way the market's reacting. And usually that's a little negative to the cattle market as well. We came into the week anticipating stronger cash trade. We've seen some offers from the feedlots out there in the Southern Plains, 143 to 144 versus 141 trade last week. So they're hoping for a couple dollar higher money. If this stock market sell-off spills over into the live cattle futures this morning, that could hurt our cash ideas, but let's hope it doesn't. Corn breaking, that should give us a little support to the feeder cattle, which were down hard yesterday. There was also a report coming out overnight about our beef exports, and they were red hot for the month of July. We topped $1 billion. That is 3% over year-ago levels. And so I know we're concerned about domestic demand, and rightfully so. But when you have that type of export markets, that's incredible. That's very good. It's one of our highest, or in the last, I think the fifth highest ever, actually, as far as our export totals. So we're exporting a lot of beef, and if we can continue to do that, we should be in good shape as far as working through some supplies that we have.
Yeah, you talked about how we had strong numbers in July, and then in August, of course, we're flying blind because we don't really know. Haven't gotten any updates for a long time. Live cattle did close slightly higher yesterday. October was up 7, December was up 37 at 150, 135. Be interesting to see if they can hang on to that today. On the feeders yesterday, wow, October took a beating, down 245. It finished at 183.12. We'll see what happens with corn today. On the lean hog trade, we had October down $1.30. It finished at 91.87. That'll be a point of reference for the open here this morning. Brian, great to visit with you. Thanks for all the help here this morning, helping us navigate the waters.
Have a good
Brian
day.
Hoops, you bet. Brian Hoops of Midwest Market Solutions. So, Janet, we're ready to begin at the bottom of the hour.